All right, for today's show, we're going to talk about we're going to talk about three things that are really big topics. We're going to talk about climate change, we're going to talk about the Federal Reserve interest rates, and we're going to talk about inflation. And the goal is not to talk about it from a political standpoint or from who's right, who's wrong, but really to talk about it for what does this mean for small business owners and why should small business owners care? So stay tuned for today's show. Now, as I said, today we have some very huge, large topics to discuss. And the reason why I say these topics are huge and these topics are large is because these are very, very, very big topics that you often hear them discuss from a perspective of how it relates to major businesses like your $1 trillion valuation business, or your businesses that are worth billions of dollars, or maybe you hear it discussed about how it relates to your global economies or how it impacts a nation as a whole. But what I often notice is you don't often hear these things talked about from the context and the perspective of a small business. And that's what we're going to do is we're going to take these really big topics and we're going to talk about it from the small business perspective, and not only just from how this may impact the small business, but also talk about it from the perspective of what can small business owners do now that we're kind of aware of these topics. So that's what we're definitely going to dive into. Now, for those of you that are new to the show, my name is Terrell Turner, and my background is accounting and finance. And so I've spent years working for some of the world's largest companies, working in the US, working in Brazil, being responsible for business operations in China and India, business operations in Canada. And so I've seen a lot of different perspectives. And one of those things that I think about in doing all of that is that very, very seldom do you really hear these major topics broken down for how it actually relates to small businesses. Now, it becomes very interesting because you often hear people discuss and they'll say that, hey, small businesses are the engine of any economy, or small businesses are the backbone of any country, of any nation. But then when you go and you look at, hey, the media and the news and the way that these topics are talked about, even when you go through advanced degrees, let's see, I've talked to many people who have a MBA, or myself, I have a master's in accounting, or any type of advanced business related degree, you often find that the entire curriculum is designed around explaining these concepts, explaining this information as it relates to major businesses. Most of the time, they don't really break it down for what does this mean for small businesses and what can small businesses do about it. So we create a lot of content to really help small businesses understand, hey, some of those complex topics related to finance, some of those complex topics related to just different business concepts. So today's topic is a really big one. And the reason why I almost hesitated about these topics, because it's almost very difficult to bring up the idea of climate change, inflation, and Federal Reserve without the discussion becoming very political about who's right or who's wrong. And there are some people that I spoke with and talked to that said, hey, Terrell, I would leave I wouldn't even touch those things. Like, just leave it to everyone else to talk about. But it's one of those things that I realized that, there are a lot of ways that small business owners are impacted by these topics. And I said, you know what? This is probably something that we got to really dive into it, because there are a lot of small businesses that need to understand that. So we are going to aim to do that. And like I said, our goal is not to tell you who's right, who's wrong, but our goal is really to point out the perspectives and to point out the variables. Because one of the things that you'll realize in running any type of business is that you're better at making decisions when you understand the different variables that you have to deal with. Because some things will go up, some things will go down, some things may shift from the left to the right, or whatever it is. But what we find is that as a business owner, if you are more informed about what the variables are, you are more likely to make better decisions in your business. So that's what our goal is. Now, the first topic we're going to tackle are the Fed interest rate changes. Now, something that we've definitely been experiencing a lot of is the Federal Reserve being a more and more hot topic about how it's impacting the economy and how it is impacting the financial markets. Now, before we dive into it, let me just kind of give, and I agree, this is going to be a simplified explanation of the Federal Reserve's impact on how money works in any system. Now, of course, there is a much deeper discussion about this. I mean, people spend their entire career studying this topic. So it is a very broad one. So I'm going to give a simplified explanation when it comes down to the Federal Reserve and interest rates. So the way that it works in the most simplest explanation is the Federal Reserve has a interest rate where that they can move up and down. Now, their goal is to help spur the economy. And the reason why they're moving this up and down is to the aim is to positively impact the economy. Now, there is a committee that meets, that reviews, they look at the economy, they discuss, and they come to a conclusion or a consensus on what direction they should move the interest rates up and down. Now, yes, there are some other things that they do, but in this section, we're just focusing on what they do as far as the interest rates. Now, in the simplest idea of it, if the interest rates are down, what that tends to mean is that if you leave your money in the bank, you're probably not going to make that much money. You're not going to make that much interest. I mean, like, we're experiencing and living through that a lot right now. Whereas if you put your money in the bank, maybe quarterly you get that email or that notification of, hey, your bank account has earned interest, and you go look at your bank account and you're like, oh, I gained 2 cents this month. And that is because when interest rates are low, that means, hey, you're not going to make that much money in the bank. Now, the idea for that is, well, if you're not going to make as much money by leaving your money in the bank, maybe you'll make more money if you decide to take that money and invest it into your business. Maybe you decided, hey, instead of leaving the money just sitting in the bank because we're going to get a low interest rate, maybe we take that money and we invest in expanding the business. And if you do that, the idea is that you will earn more money by investing in your business than you will by leaving it in the bank. Now, from the Federal Reserve perspective, this I guess you say the good thing about this is that if people are actively investing and spending money in the economy, it causes the economy to keep moving. It causes money to move through the system. And as money is moving through the system, it allows for other things to happen. Now, for a small business owner, the real question to ask yourself is, okay, all right, if the Federal Reserve has the interest rate low, what does that mean for a small business? Well, a couple of things that it may mean for a small business. As we talked about an example, when the interest rate is low, if you leave your money sitting in the bank in your savings account or some type of bank account, you're probably not going to see that much interest. I mean, you might make a penny or 2 pennies or whatever. But what it also means is that you might be able to find debt and you might be able to find loans from other financial institutions at a lower rate. Now, the reason why that becomes important is because as you're growing your business, sometimes you'll reach a point where it's like, hey, to grow your business to the next level, maybe a loan is a smart idea. Now, you definitely have to run the numbers to understand, is a loan the right decision for your business? But when you run the numbers, if the interest rate is low, it could be a smart idea for you to borrow money at a low interest rate, invest it in your business to grow your business enough to where the growth in your business can pay off the loan, plus put extra profits in your pocket. Now, if you didn't have that loan, maybe you wouldn't be able to make that decision. So when it comes down to looking at the rates, if you flip things and you say, well, what if the Federal Reserve increases the interest rate? Well, when the Federal Reserve increases the interest rate, what you'll start to see is maybe the interest that the banks are paying you to save money actually go up some. So what you'll start to see is the idea is that less people will be spending more money in the economy, which means that, hey, people might save more money or people may set more money aside. And some of the debt that you could have gotten access to, maybe the interest rate on that debt becomes a little bit higher. Now that we kind of understand that, the real question for small business owners is, okay, we don't have a crystal ball to know if the Fed's going to increase the rate, if the Fed's going to drop it, if they're going to keep it steady. The question you ask yourself as a small business owner is, okay, what do we do? Now, a couple of things that I think small business owners should be doing is, one is you should be looking and asking yourselves, what decisions or what investments could we make in our business to grow our business and make it more profitable? As a business owner, you should always be thinking about that. Like, what areas of our business could we put more money into and cause the business to grow at a more profitable and a faster rate? Now, as you start to think about that and you start to understand that, the question that you should ask yourself next is, how much money would it take for us to grow our business faster? And as you start to really understand what that looks like, it can then help you start to think through, hey, should we get a loan? Or, hey, do we have enough money in savings to actually invest in that area of our business? Because one of the challenges that a lot of business owners face is that if you don't know where is the best place for you to put your money, oftentimes business owners, and especially small business owners, they'll end up putting their money in places that are not in their best interest. So as a small business owner, you should be looking at your business and asking yourself that question of, hey, where is the best place for us to invest money so that we can grow the business or we can make the business more profitable? And then the next question is, okay, now that we know if we invest in this area and we know how much we should invest in this area, where can we get the money? Do we pull it out of the savings? Do we go get loans, or do we bring on investors? Because that really starts you to really be able to think through strategically, hey, how will the federal interest rates changing? Because if it stays low, more capital will be available through debt funding. But if the interest rates go up, debt becomes more expensive, which may change your strategy about your business. Now, the next topic that I want to talk about is inflation. Now, there are a lot of different things that are going on and a lot of different ways that impact inflation. So, again, I'm going to give a simplified explanation because this is a very deep topic that you could spend years studying. But in a very simplified perspective, inflation is really that the dollar you have, or whatever currency, the yen, the pound, whatever currency you have, is that currency today does not buy as much stuff as it used to buy yesterday. For example, if you think about some of the most common products that people buy, or let's say milk and eggs, or let's say if you're a vegan, maybe you don't buy those products. Maybe you buy vegetables and produce. Well, if you think about it, you say, okay, all right, I used to buy this product at, let's say, $2.15. I could buy a dozen of these, or I can buy a gallon, or I can buy a bushel of these. Well, if today that same amount of whatever product it is, if it now costs you $2.60, that is probably in its simplest state. That's what inflation is, meaning that the prices have grown, but what you are getting for your money is that didn't grow. Now, deflation would be the opposite, meaning, like I said, it would be I guess you say, the polar opposite of that explanation. But right now, what we are seeing and what a lot of economies around the world are seeing is inflation, meaning the money you have today, it doesn't buy as much as it used to buy yesterday, or 3 months ago, or 4 months ago, and so on. And the question that you ask yourself as a small business owner, what does this mean? Now, the first thing it means is that the cost of doing business is changing. Now, one of the things that a lot of small business owners do not tend to do very well is to really analyze what does it cost you to actually run your business. Now, if you start to think about what does it really cost you to run your business, you can start asking yourself some very important questions. Are there some areas where we may need to cut back? Or are there some areas where we need to be more strategic about what we're doing here because it's become more expensive for us to actually do this? And then also is asking yourself is, hey, does some of this cost need to be passed on to the consumer? Meaning, do we need to actually increase our prices? Now, this becomes very, very important for small businesses because oftentimes, if you're a small business, your margins aren't very, very big, or you don't have a ton of wiggle room when it comes down to your profits. So, as a small business, you have to be very vigilant about monitoring what does it cost you to actually operate and run your business. Because if the dollars you were spending today are not getting you as much as yesterday, what that tends to mean is for you to be able to do and operate the same level in your business today, that means it's going to be more expensive because the price tag on everything has gone up. So, as you think about that as a business owner, the question you need to ask yourself is, hey, when we look at where we're spending money in our business, are there areas where we can make some adjustments and still deliver the quality and the value to our customers? Or are there some areas where we need to make some changes and some adjustments? You know, one of the things that we've done at the Terrell Turner Group and working with several businesses is when we've looked and it really helped them dig and analyze the cost. Some of the things that we found with some of these businesses is that there were some products that they were offering in the past. Because the cost structure has changed for that product or the things that go into that product, some of those products we've come to a conclusion to say, hey, we need to temporarily stop offering this product, or we just need to put an end to this product altogether because of inflation and the fact that it's costing you more to offer this. You're not making money as a business anymore. So maybe we don't need to keep selling a product that is causing you to lose money. So, as a business owner, and especially as a small business owner, you want to make sure that you are continually monitoring what does it cost you to do business? What does it cost you to provide your product or your service? And if the cost of that increases, you got to ask yourself some very tough questions of, hey, how do we reduce the cost? Or does our price need to change because the cost of doing business have changed? Now, the last topic that I wanted to cover was climate change. Now, again, I hesitated on this one because there is this, when you bring up the topic of climate change, there are a probably endless number of directions, or I guess you say perspectives, that point this to being solely a political conversation. And our goal here is really just to talk about things from the perspective of a small business owner. Like, how does it impact them and what can they do about it? So, what I really wanted to focus on as it relates to climate change is, as studies have been done of what are the things that do have I guess you say, a larger climate impact. And one of the very big things that tends to have a climate impact are freight and shipping. Now, most businesses or small businesses are probably thinking about this. Well, that doesn't really impact us as much because, our product is virtual, or maybe they say that, hey, we're not shipping our product around the world. We don't. But one of the things that I have really looked at for a lot of small businesses is really looking at their supply chain. Like, where are you getting your products from? Like, yes, your customers may be local to you, but when you think about it, is where are your ingredients coming from? Where are your raw materials coming from? Like, when you buy the product from someone else, where are they getting it from? Because as you start to think about that supply chain, one of the things that a lot of small business owners started to realize is that, you know what, their business actually does have an impact on the climate and the environment more than they realize. Now, as you start to think about that, the important thing is really starting to ask yourself a question of, if you desire to make a change on how your business impacts the environment and how your business impacts the climate. If you decide that, hey, we as a business, we want to make a change, my best advice to you is to be strategic about it, is to start thinking about it in, I guess you would say, probably the most informed way of really putting all of the pieces on the table, all of the variables, making them known, and then making a conscious and an informed decision for your business to say, okay, all right, if these are all the variables, how do we impact it? For example, if you realize that, hey, we have a product that we sell to our customers, and most of our customers are local, but when we look at the supply chain, some of the parts that go into this product that we sell, they're coming from this country, and which means that, hey, the materials have to be, shipped in on a freight ship. They're traveling by sea. They get to the ports, then they have to get on the airplane to fly to this factory. And then from there, they have to go here. And then finally, it gets on a truck and it gets delivered here. And then we sell it locally. Well, when you start to look at that entire supply chain, maybe you start to ask yourself, hey, are there other vendors that we could use as our new sources to buy the ingredients or to buy our product from? Is there a vendor that is closer? Now, that one will definitely start you thinking through a path of, okay, all right, how do we, as maybe a popular way of talking about it is, how do we decrease our footprint? Meaning, how do we make sure that we're getting our products, or we're dealing with vendors that are closer to us, which means there's less transport, there's less travel involved. Now, as a business, you also have to think about, well, what is that decision going to cost you? Like, what is the price of making that decision? Because you may realize that, hey, there is a vendor right down the street that can provide this product, but the cost is going to be 10 times higher. As a business, you may not be able to absorb a price that is 10x what you are currently paying. Maybe you have to get a little bit more creative. Maybe you don't just buy everything from the one supplier that's locally. Maybe you start to mix up some of your supply chain, and maybe you start to look at different ways to approach it. Another area that I've seen a lot of businesses really examine is the packaging of, when you deliver your product and that product to your customers, what is the packaging that you're using? What goes into that container? I mean, what are you actually putting into it? And a lot of businesses have been finding that they can actually start to re-look at the way that they are packaging their product. And believe it or not, as some businesses have started looking at, how do we re-engineer the way we're packaging, or how do we find a different packaging option? What some businesses have found is they've actually been able to cut the cost of their packaging by thinking about it differently. So as you're running a small business, something to really consider is the way you deliver your end product to your customers. Is there a way that you can change the packaging of it? And in some instances, what I've also seen is, by using an alternative packaging and by really thinking about what matters to the customer, how do we improve the image? Plus, how do we make this, more friendly to the environment? What some companies have also been able to do is, their customers have seen more value in the way the packaging comes, to where they've been able to charge a higher price because customers actually like the new packaging more than they like the old one. So as you're running your small business, the factors to really consider is looking at your supply chain. Who is in that supply chain? Where are your products coming from? How are your products getting to you? And asking yourself, are there other options that we can use to actually source our products? Are there other vendors we can use? Can we use a mixed strategy, meaning getting some of our product, getting 70% from this vendor, getting 30% from this vendor? Now, that one becomes also another important factor for managing the risk of your small business. Because imagine this, you're a small business and you're getting all of your products from this one vendor. Well, what if something happens to that vendor? Your entire business is in jeopardy. Now, I'll give a personal example of that story happened when I was the finance leader for a segment of a multi-billion dollar company. And one of the issues that we had is that one of our main supplier for a product had a devastating fire, which means their entire factory burned to the ground because of a fire that happened in the ceiling. Thankfully, no one was physically hurt. But what it did is it really gave us a wake-up call because our only supplier that we were using had a devastating fire, which meant our business was extremely vulnerable because it would take 12 to 18 months for that supplier to get back up and running, which meant it drastically changed our business model. Because when you don't have an alternative source for the things that you need to deliver to your customers, it puts your business in a huge disadvantage when it comes to how you play in your market and your industry. So looking at your vendors is not just something that will impact your environmental impact, but it also is smart for your overall business strategy, because no one wants to have a business that has one single point of failure. Because if your business has one single point of failure, you are highly vulnerable to losing your business or to losing to your competitors who find a way to take advantage of that, or you're very susceptible to something changing. And one of the areas that a lot of small businesses are noticing and they're paying attention to it more is if you've been sourcing a lot of your products from China. One of the things that we have seriously seen over the last 2 years is if you've been seriously sourcing your products from China, well, when different things happen and something impacts that supply chain, it had a drastic impact on your business. So it is definitely a great opportunity to take the time to really assess your supply chain and then also ask yourself, are there creative ways for us to approach this? One is to improve the impact that we may have on the environment, and also to better protect and prepare our business to, I guess you could say, de-risk the business, leave your business less exposed to risk that could happen because you have a single point of failure. So thank you so much for tuning in today. As I said, here we are dealing with different topics that you may hear about in the news and in the media, but our goal is to talk about it from the perspective of the small business owner, because there are a lot of things that are discussed in the news and the media, but very, very seldomly do you ever hear it broken down and explained from the perspective of the small business owner.